Welcome to today's webinar on reducing your taxes in Spain with myself. My name is Robin Thornton. I'm going to be your host today. And we've been joined, my colleague Andrew Southgate is going to be the presenter. Andy, welcome.
Thank you very much, Robin.
Andy's a chartered financial planner with an extremely large amount of experience, especially on Spanish tax. I think I'd like to say you're an expert on Spanish tax. Would that be fair?
It's not laid on too thick, but yes.
No, we're not getting our expectations too high. But the time now is just 4 o'clock. We are just seeing the numbers. What I'll do is I'll start, if it's okay with you, Andy, I'll just wait until the numbers level off as people are joining. I guess depending where they are in the world and the amount, the quality of their connection as well. We'll just give that kind of 10, 15
a minute
seconds.
or so for people to get on board and
yeah,
take off.
I think so. I think that's leveling out now, actually. Okay, we've got, it looks like we've got most people in the room, so to speak. So I'll just run through today's agenda, if that's okay. Or Andy, have you got the agenda on your slide? I can't remember. Apologies.
No, it's really just running through various different aspects of how to reduce your tax in Spain. Very much a taster of what we do, and I'll give people a flavour of what we do.
That's great.
And if there are any questions, there'll be some time at the end for some Q&A as well. So it's going to be a relatively short presentation, around 10 minutes or so, maybe 15.
Yep.
And if you've got any questions for me, then by all means, fire them at me.
Nice and to the point. I like that. Succinct. Thank you very much. Okay. Well, Andy, if I can hand over to you, that would be great.
I will share my screen now. First of all, can you all see the screen? Can you see the screen, Robin?
Not yet.
Not yet. Can you see it now?
It's coming. There we go. Gotcha.
Okay. Great. Well, thanks for the introduction. As Robin said, my name is Andy Southgate, and I'm a senior partner for Holborn Assets here in the Iberian Peninsula. So I'm going to guide you through some of the issues in Spain that you should consider addressing when you are a resident in the country. Firstly, just a little bit about our company. We are an international firm of independent financial advisors and also tax planners. We have offices all around the world, as you can see on the screen now. So the European Union, UK, USA, Asia, Middle East, and so on. We're growing all the time. We have around 250 advisors globally. And we have now, I think it's around $2.5 billion US that we look after for our clients globally. We're aiming to get that to 3 billion, I think, this year or early next. So moving on to Spain, what is it that we actually help our clients with in Spain? Well, some of those things are on the screen now, but essentially we give them a financial roadmap or a plan to help our clients reduce tax, help with Spanish reporting requirements, and of course, to give them peace of mind. This list is not exhaustive by any means, and as I said earlier, it's really just a taster. So please feel free to contact us for a one-to-one discussion about any of the issues that are raised today, so that we can, of course, tailor any conversations to your individual situation. So one of the most effective ways to reduce your tax burden in Spain is to use a Spanish compliant account. So I'm going to run through an example now of how that might work. So imagine you've invested €500,000 into a portfolio of investments with no tax efficiency whatsoever. You make a gain of 10%, which is €50,000, and decide to withdraw that gain. So in Spain, the tax would be on the full gain of €50,000, and it's 19% tax on the first 6,000, followed by 21% tax on the subsequent €44,000 of gain. That will give you then a total tax bill of €10,380. However, if you'd used a Spanish compliant account in the same scenario, the tax would only be payable on the growth element the original capital would be ignored completely for taxation purposes. And in this example, the growth element would work out as €4,546. So if you multiply that by 19%, that will give you a total tax bill of €864. So there you've just made a tax saving of €9,516 simply by placing the money into a Spanish compliant account, which is, in my view, a complete no-brainer. The other great thing about the account is that that tax will actually be withheld by the company providing you with the account and paid to the Spanish tax authorities, that is Hacienda, on your behalf and logged against your Spanish NIE. You'll then receive a certificate showing you how much tax you paid that you can give to your Spanish accountant or whoever does your Spanish tax return to tie that up when you submit your tax return by the end of June in the following year. So it's a really great way to reduce your tax bill, but also a really great way to take care of some reporting as well and make sure that you're paying the correct amount of tax. So I'm going to talk a little bit now about wealth tax, which is a very complicated area. So I'm just going to run through an overview of it and a bit about how it works and how you might be able to reduce it. So Spain has 17 autonomous regions, all with different variations of wealth tax. Some, like Madrid, are set at 0, but others, like Andalusia, have a wealth tax. The allowances are €1 million per person for Spanish residents. And the assessment is based on your worldwide assets, not just the assets that you have in Spain. That €1 million allowance is broken down into two parts. 300,000 is allowed for your main home, with a further €700,000 being allowed for your other assets. The rates are variable and they can go as high as 3.5% on wealth remaining after the allowances are taken into consideration. That example is from Valencia, which is actually one of the autonomous regions with the highest rates of wealth tax in place. There are certain exemptions, for example, antiques and certain works of art, and pensions are also totally exempt if they are in the European Union. I appreciate that some of you on this webinar may be from the UK or other English-speaking countries around the world, and with the exception of the Republic of Ireland, most English-speaking countries are third countries. For example, the likes of Australia and Canada and so on, and your pensions there will certainly attract wealth tax. So there's an obvious planning opportunity there for you to move any of those pensions into the European Union and therefore avoid them being brought into the wealth tax net. So I'm going to run through some examples of how to reduce or even eliminate wealth tax in Spain entirely. Firstly, you could restructure your assets into joint names if you have a spouse to utilize your allowances. Secondly, you could use a type of pension scheme called a QNUMs. Tax advice would be required in this scenario and you need to contact us to talk through your situation, but potentially any money invested may be completely outside the scope of wealth tax. As I mentioned earlier, you can transfer your non-European Union pension to a European Union pension. And you can also use liabilities such as a mortgage to reduce your net wealth. There is a rule with wealth tax in Spain that the overall amount you pay cannot exceed 60% of your gross taxable base. Therefore, if you are a resident in Spain, it's worth exploring your options as to how you can lower your taxable income to benefit from this 60% rule. Now, it's beyond the scope of this presentation to go into huge detail about the rule. However, the main point here is that wealth tax can be manipulated downwards by restructuring the way you receive your income in Spain, and that's completely legitimate, completely legal. And so if you feel that you have a wealth tax issue, please do get in touch so we can talk you through that. Some of the other things you can do is you can gift some of your money away or your wealth away to spouse and children. And you could also use a Spanish compliant account because that's one way you can actually reduce your taxable income. So please talk to us about that. So look, it's been a very, very short and to the point, succinct presentation today. We've been hopefully through some brief and useful ways that you can reduce your tax burden in Spain. Hopefully it's given you a flavour of what's possible. But if you do have any questions, now is the time to ask, and we will endeavour to answer them. And thank you very much, Robin, for having me on.
It's a pleasure, Andrew. Thank you very much for that. I do have a couple of questions have come in, one via the messenger service.
Sure.
You mentioned there a Spanish account, a Spanish compliant account. Can that be held in joint names, or must it be just a single name?
No, it can be held in joint names or in single names, depending on your situation. And you are also allowed to include family members in various different ways, for example, as beneficiaries, should you pass away while holding the account.
Okay, that was kind of a follow-on question, actually, from the same gentleman. Is how does this or these type of accounts work in Spain on death?
Yeah, the way the accounts work is that once the people who are actually the owners of the account, the policy holders, and they pass away, if the policyholders have nominated a person or people to receive that money, then the money will be paid out to those beneficiaries, often without having to go through a probate process. So the money can simply be paid out to those people wherever they are in the world without having to go through probate.
Yeah. Okay. Well,
that's a very efficient way of passing on wealth.
Yeah, well, unfortunately we do come across this, don't we? We've all been in this business long enough to we've had to deal with end of life issues, should we say, with clients. Indeed. Okay, and one more question in terms of like investments within the Spanish accounts. One gentleman is asking, is there a minimum level, basically?
The short answer is yes, there is. It's usually there are a number of different providers in the marketplace of these accounts. Usually the minimum level is set at around 100,000 euros. Okay.
All right. Okay. That's it. That's brilliant. That was quick and to the point. That's all the questions. That's lasted, what, 14 minutes? I think that's a record.
That's a record. We've gone on a bit longer, but there we go. Okay. Hopefully it's given everybody a good idea, and thanks very much. We'll see you all again soon. Take care.
That's great. Thanks, Andy. Take care. Have a good day.
Bye-bye. Cheers. Bye-bye.